Hi, this is Randy Finney with Right Side of the Chart, and today is Tuesday, May 7th, 2019. This is a midday update. I'm going to keep this one for members, go over just some of the things I'm watching. We'll start out here with the broad markets. There are some notable developments on both the daily charts and the 60-minute time frame, so I'm going to go over those. And then I want to touch on a couple other things that I'm watching right now. I'll hit on SOX since we added the semis as a short today. TLT, I remain bullish on that. It's still more out of laziness than anything else, an unofficial trade, but I made clear where it was an objective buy, and I'm going to go over that again. In gold, I like right now continues to firm up, and that's on the radar for an official trade. Wheat is starting to look good too, so I'm going to go over just a few kind of broad-based trade ideas. We're not going to do individual stocks in this video. Yeah, like I said, start with the broad markets here. All right, so what's most important to me right now, and I'm going to get into the 60-minute charts here in a second, but the daily charts take precedence over the 60-minute charts. So far today we have another impulsive day of selling. Like yesterday, the last couple days here, we've had some impulsive selling. We've actually more so volatility. It's been impulsive buying too. When we get down, we'll get to the 60-minute charts in a second, but there's crazy rips and dips. So one thing's for sure, volatility is expanding, and that's usually what happens. Before a big move. It could be a big move to the upside. I don't think it is right now, and if that changes, I'll let you know. We had volatility expand here. You can see the price compression leading up to that, and then we had a sharp drop down, and then boom, they reversed it and gunned it up. There was another period of volatility expansion, and that preceded this leg up. We'll see where this one goes. Maybe it proves to be the same. We'll monitor it closely, but I'm going to give you guys levels to watch. So as of now, we've taken out yesterday's lows in both QQQ and SPY. Not by a whole lot. Let me go over that real quick. Here's a 5-minute chart. Let me get rid of that fib line here. Let me put a line. There's yesterday's lows. I told you that's what I wanted to see taken out. Right there was a low yesterday. We opened and never looked back. So we broke it today, and we've been back testing. Nothing else. It's hard to argue that's not a significant level. You can see what happened today. Here's today's price action on this 1-minute chart. So we gapped down today. They tried to buy the gap, faded it, came back down, touched yesterday's low again right here to the penny, or close enough. Bounced, came down, then broke it, and then you had a little wave of semi-impulsive selling. Came back, and we've been boom, boom, tap, tap, tapping on that. So whether we take it out or not, it is a very near-term important level or significant level today, and we'll call that about 187. You can see I have 186.96. I just roughly put the line there. So watch this. Watch this level and watch it on SPY as well. There's the, if I can pull SPY up here, there we go. Give you the line right there. There's yesterday's low, and you can see a similar story here. But QQQ is really where my focus has been lately, so we'll continue to watch that. All right, so again, if I had to pick one significant development, well, two. It's the large caps. Remember, the large caps are the stock market. Yes, there are small and mid caps in there, but they dwarf. If you add up all the 2,000 stocks in the Russell 2000, it doesn't even come close to the 500 and the S&P 500. So that's where the stock market is really following these guys, and that's where most people's money is, the majority of it at least, in large cap stocks. So the two things that stand out so far right now, and this could all change, is a failure at those 2018 highs. And again, I don't care if we popped it by 0.3% or whatever, technically popped it. That is a test of those highs, and so far a pretty impulsive rejection. And it also came on the heels of the breakdown of that uptrend line, and it came with the divergence and everything else I've already talked about. So that's SPY on the daily chart. As of now, so far so good for the short case. Maybe it'll be another one of these pullbacks like we had here. That's one thing for certain right now is volatility has expanded. And we saw volatility expansion right here. Let me grab a line tool here. Give me 1 second. So we saw, volatility compression right here, small candles, and then boom, a little correction with some big red candles. volatility expanded at that point, but it led to the next leg up. And then, the candles were getting smaller. We had some big volatility expansion right there, and boom, it led to the next leg up. So I'm giving you guys the possible scenarios here. Maybe this is just a repeat of these two, corrections that dip buyer stepped in very aggressively, and what it would mean now. Remember on QQQ, so far, again, and I'm taking everything right now one day, 1 minute at a time. And as of right now, by the time I finish this video and get it out to you, things may have changed. But as of right now, we have failed that breakout on QQQ. Remember, SPY failed at the attempt to break out, never even made it, put in a double top. The Q's double topped back here and then broke out right here. So we had this recent trading range, or the breakout, we back tested for a while, and now we've moved below. It's a failure. But as I said before, it is not uncommon to see a breakout to new highs come in, and instead of making a perfect back test before taking off, sometimes they undercut it, run some of the stops. So all I want to say is, as far as the shorts go, I like what I see. I'm taking this failed breakdown on face value. Why? Because of all the divergences, overbought readings, everything else in place, and I think there's more downside. So let me be very clear on that. I may be proved to be wrong, but as of now, it's what I wanted to see. That's an impulsive break. We took out yesterday's lows, failed breakout there, which has the potential to be very bearish. And that's the other thing I just want to convey in this video. I have relatively shallow price targets on QQQ and SOX and everything else. Here's your price targets. But I have potential targets. I'm very willing to, expand the targets on this trade, trail my stops down personally, or trail the stops on the official trades, depending on what I see going forward. So right now, let's take it one day at a time. Here's some near-term targets. And if nothing else, before I finish this video, remember, stocks tend to fall a lot faster than they rise. We've certainly seen some sharp rallies this year where stocks rose pretty darn fast, nearly as fast as they fell. But you go back at all points in time, go back for years, and you will see that typically they fall faster than they rise. That drop there was a lot faster. It took a shorter period of time to get down to there than it did to get back, even with that explosive rally to the upside. So just keep that in mind, that as far as, if you're planning to short or you're bullish and you're planning to buy a dip, you're going to have to move, because just being late by a day, or even in some cases half a day, can make the difference of having an objective entry on a short or a long trade, or an objective exit if you want to get out. That's the other thing about shorting. You got to be nimble, both getting in and especially not staying too late to the party. I talk about that all the time. So I'll try to, as the market's volatility picks up and we're finally getting some movement here, after these weeks and weeks of small price compression, little candles, I'll continue to up the frequency of my updates, both here in the trading room as well as on the front page for silver and gold members as well. So that's that. And again, bigger picture. This is the why did I go here? That should have been on a 60-minute chart. There it is. There's our QQQ short trade. All right. So I already showed you what happened on the daily, and so far so good. 60-minute chart, something to watch. I mentioned this in the trading room. Potential divergence. Now, potential divergence is not confirmed. In my book, confirmed is when the PPO, if and when the PPO curls back up here, makes a bullish crossover, which at that point it would need to effectively put in a higher low above this low. That would be bullish divergence. As of now, there's a potential, if we keep going lower, that divergence will be burned through and taken out, and that's pretty darn bearish if that happens. Usually you see these potential divergences. If they don't form, they get taken out. You usually get a pretty good drop. So keep that in mind. If we reverse today and we popped back above, well above today or yesterday's lows, that could spark a rally. It could confirm these divergences. It is not my preferred scenario, but it's certainly worth watching. Let's look at the futures real quick. This is interesting to note. Here's the NQ 60-minute chart, futures. I'm going to zoom in. I've covered this quite a bit, so you can see the trend line off the lows from the 24th. Then we zoom in tight. Here's that sort of a megaphone wedge type pattern that I've talked about here, broadening wedge. It's almost opposite of a bearish falling wedge because it gets wider as it goes. And I need to, if I can pull that line up there just a little bit, here we go. Just trying to clean that line up and get all those reactions, and they're nice and tight. Oh, close enough. So since volatility has expanded, we've seen some very powerful rips and dips, big intraday moves. Active day trader, if you're quick enough, you can swing those moves, but you can see the moves have gotten increasingly larger, although we did have a failure. Remember yesterday I pointed out 78.04. That's where we capped two different failures there. So far so good for the bears. I like to see that. I like the fact we didn't run back up to the top of the range, that we failed short of it. And now, what I wanted to point out here is that's what we've hit so far at the lows today, the bottom of that range. This is where the buyers have stepped in aggressively and had some big rallies since this downtrend line started here. And so far today, they've stepped in as well. So what I'm getting at is, whereas normally maybe I might cover that, I'm going to hold tight. I'm out of my RTY. I was stopped out this morning of the RTY hedge, so I'm all short right now. As far as indexes go, I have other positions, gold, treasuries, and other things like that, some wheat, things that I'll get to in a minute here. But this is where the buyers have stepped in, and if you're bullish, you want to take a shot at it. I too much that I'm seeing today that I'm personally not going to cover or go long. But if we do come back up, the next logical resistance, well, let me give you another level here. Right about there. That's definitely the first resistance level, about 77.35 on NQ. So if the buyers can step in here once again, that's resistance 1, target 1, and then 78.04 again, and then after that you run at the highs again, right there, and that's I'll put a line if and when we bounce. Now where I'm going with this is, if they take that line out, that's going to be it. I think that would be pretty damn bearish. So if we undercut today's lows by quite a bit, we've now taken out this trend line here, where the dip buyers have been coming in at lower and lower levels. And remember what happens, it's a psychological thing. Dip buyers, they're genius, they're rewarded. It's like Pavlov's dogs, buy the dip, dinner bell rings, buy the dip, you get food. And that works until it doesn't work. It's like a yogiism. Buying the dip works until it doesn't work. And so there's a point, I call it the point of recognition, where the dip buyers step in and all of a sudden they begin to realize, hey, this isn't working anymore. And there's a lot of dip buyers on board recently. So when they all go the other way and they say, all right, screw this, I've been buying the dip since right here, and now I'm stair-stepping lower, and I'm underwater to an extent that I haven't been in a long time. And so then they start to sell. And then the shorts pile in because they smell blood in the water like a shark. So that's what I'm looking for. First target is still on NQ 75.43-ish, and that may or may not align with T1 on the QQQ trade. I'll have to look at that. I'm just sharing these levels for NQ traders. Oh, and by the way, I posted something in the trading room yesterday. I'll try to get that link out to everybody. Interactive Brokers is now offering the new micro mini futures. They trade 1/10 the size of the NQ. NQ contracts are about $155,000 per contract represented in the NQ, the index. So in other words, a 1% move would be about a $1,550 change in your value, gain or loss, for every 1% that the NASDAQ swings up or down. Whereas these new micro minis are 1/10 of that. So therefore, you put down it's about a $15,000 representation of the NASDAQ 100, or QQQ you can call it, and therefore every 1% swing is going to be about $155 instead. So and they have them for the Russell, the Dow, the S&P, silver and gold. So there's some other trading vehicles for those of you that don't have the capital to trade the E-minis, the NQ, ES, and those other ones. Okay, so back on task. There it is. First target there. Next target down here. And again, you already saw, I think we already hit on QQQ. 60-minute. There's our targets. And so we'll see how things go. If and when we get down here, probably if we get to T2, maybe even T1, I might lower the stop. But again, that's up to you if you want to do it. And I may also extend targets depending on what goes on here. But first things first, let's see if these divergences are taken out or if they're confirmed. Another stick save. Goodness knows we've had plenty of reversals recently. What else do I want to cover for you? SPY I already covered. Yeah, we touched on SPY. Here's what it looks like on a 60-minute chart. Breaking support right now, about 288.83. Cracking down, not impulsive selling yet. I would have preferred to see a sharper sell-off now that those lows from yesterday have been taken out. But again, as of now, we're below there, so let's just take it for what it is. And we're also, down pretty good right now on SPY. What else? Oh yeah, IWM, very important. All right, so IWM, remember we had a mixed bag here. We had on the bullish side a breakout of that level right there, the 159.54-ish right there, and yeah, there it is. A couple green candles, breakout, but then we failed the breakout today. Yesterday we failed it intraday. Today we failed it. The day is still young, but look, we're back right on that trend line, and I told you that's the one to watch. If we break that trend line with conviction, especially daily close below there, it'll mean a couple things. It will be a break of a trend line, which in itself is a sell signal, a break of support. And number two, it would also mean a failed or false breakout. And number three, it will probably give us turn the PPO back down here and confirm this negative divergence. So really what you're looking at is a wedge that kind of coincided with a breakout on the small caps, and fewer things in trading are more bearish than a failed breakout. Probably come down here at least at 154.65 level if that breaks, and possibly more. So there's IWM. As of now, the breakout has failed. So if you took it and you're long, just monitor it. If you start to crack this level and it looks like we're going to close below it, or we have a very impulsive intraday break, you may want to pull the plug on that one. That's up to you. TLT, again, more so out of laziness, and this should have been added, but I've mentioned it many times, is liking this one on the pullback to 122.46. And we've had a couple weeks of, opportunities to buy it there. It's defended that support. And so my scenario all along has been we put in divergent high. I was looking for a correction there. We got it. Even though we had divergence, we were holding up right here at the zero line, keeping the trend indicator, this trend indicator, the 9 EMA bullish. And so I still think we can have another thrust up here, look something like this. Maybe put in a divergent high when that first target's hit. I have actual resistance around 128.55, but that first target's at 128.18. I may add it as an official trade. I probably should have done so already. But again, this is good also for asset allocation. This is good for 401k money, things like that. If you're worried about this, the overheated market, where to put your money in, 401k where you're not going to get crushed, but you can maybe make something. That's where, I think a piece of the pie. It's not where I'd put 100% of my money. I wouldn't put 100% of my money into any one asset class or anything, but this certainly makes up a piece of the pie right now in my accounts, both long-term and even my trading account. All right, next up is gold. Gold, I'm continue to monitor it, and I like it. It's setting up, not so much here on the daily. It could work its way down here, just eyeing this daily chart at GLD, maybe come on down here. So we'll watch it. If it zigzags down to the next really nice support there around 117.40, but it may not get that far. There's a lot of things. I've covered gold in other videos, and I don't want to go too deep into this one, but here's a 60-minute chart. Let's see how that looks on a 2-hour chart, 120-minute chart. There it is. So you can see the divergence here, bullish divergence here on the 60-minute, this 120-minute chart. There's your divergence line. There's a downtrend line, and gold could be setting up to run. It's also a flight to safety asset. So if the stock market continues to move lower from here, chances are gold will catch a bid. I can show you gold futures. I'll do that in a second. Let me show you the euro US dollar. I'm still very much watching this for a breakout of this bullish falling wedge pattern here. these two downtrend lines, particularly that white downtrend line there, and or that I'd like to see also above that 113-ish resistance level. So there's the euro US dollar. If this breaks out, that would give us a pretty good buy signal, or at least confirmation on gold. um, I'm going to jump all over the place because I already had this chart loaded. This is wheat here. Let's make sure I have that centered for you. Hold on one second. Okay, this is the 60-minute chart of wheat. I also have wheat futures at a long-term trend line. It's on a different charting program on another monitor. I'd have to resize it, but a multi-year uptrend line that wheat futures has pulled back to. And this is just a 60-minute chart showing you the divergent low right here, positive divergence. So I know these commodities, ag grains and the ag commodities have gotten the snot knocked out of them, but you know, there's trading ops. This is what swing trading is about. You don't have to become married to a trade. Last time we had a divergent low was right here. There it is, and we broke out, back tested, and that was good for you know, off the lows. What was that trade? That was just trying to measure it out here. Where's my measuring tool? Got it. Oh, here it is, right here. From lows to highs, that was a rally of about, you know, 11.5% or so. Actually, yeah, about 11.5, 12%. So there it is, another divergent low right there. Don't have a very clear downtrend line to take out. That would help. That would be your buy signal. But you know, it seems to be bottoming here. And if you look at it this way, also, it's, you know, it basically made another test of those lows, and so far it's successful. So there's a potential trade. Let me show you what wheat the ETN looks like, because I know a lot of you guys don't have a futures account. Wheat is the WEAT, is the ETN for wheat, tracks the wheat futures, kind of setting up in this wedge type pattern here. Nice strong positive divergences here on the daily chart, a couple green candles recently. So you know, I've been not burned by these. I've had some trades, some panned out, some didn't. I'm talking personal, some on the site. It seems these commodities, they just, every time they look to get set up, they just can't seem to keep a bid. They start to catch a bid and that gets faded again. So I'm being a little bit skeptical and cautious on this, but I wanted to point it out. I do like it. There's targets. If it becomes an official trade soon, and whether it's official or unofficial, I will say this. I get an F this year in 2019 for the official trades, and maybe not an A, but close to it on the unofficial trades. The a lot of, you know, for the shipping stocks alone, you know, all done, you know, high double-digit gains, and a lot of other individual stock trade ideas and ETFs and things like that that were unofficial trades. So that's where the trade ideas have been this year, and most of those have been in videos that I covered and like this. And I'm throwing out trade ideas and may or may not get around to putting it on as an official trade idea. So if I didn't like anything, I wouldn't share it. And remember this too, there's also some trade ideas are set up as shared as potential setups, needing a trigger or buy signal. Maybe it's something setting up for a bullish or bearish move, and then others are more actionable. Right now, you know, gold, although we don't have a hard buy signal, I think it's actionable if the broad markets take another leg down today. So we'll get back to those in a second here. What else did I want to cover? That's about it. So let's just wrap it up with the broad markets. Look at where we're at. They're certainly defending this level right now. You can see the buyers are stepping in. Here's that potential divergence on the 60-minute chart right now, still in play. Again, only potential divergence. And so I think where we go today, we're either going to have more of the same, where we came and kissed that line. We have a rally up, back up here again in the Qs, and they recover, especially if they can solidly get back above yesterday's lows, or we get another leg down. I favor another leg down. Again, these intraday charts can whip you to pieces, and they will. You have to define your trading style and your time frame. And if you're a swing trader and you're not a very nimble and active trader, this should be your go-to. And right now, since we entered the QQQ short, since Qs broke down, although we've had a lot of back and forth, a lot of volatility, we're stair-stepping lower. Here's, you can see that's the near-term trend. So why we don't have anything like a waterfall sell-off, the bearish case continues to firm up each and every day so far. Not each and every day, but most days so far, and especially today. So we'll leave it there. Oh, before we do, I did mention SOXX. That was added as an official trade today. Let's see, I used a 60-minute time frame on that one, or maybe it was a 2-hour period chart. There it is. There's our targets right there. Stop. So this one's cracked below that trend line, and I just think there's a if the market rolls over, again, needs just a little more push to the downside, I think, to really kind of open up some more impulsive selling. Then I think you have probably more bang for your buck on the semiconductors than you do on QQQ. If that second target's hit, that's going to be about 11% gain. All right, this is what the trend line looks like right here. So we're just cracking below. Here's your trend line off December 24th lows. 1, 2, 3. So we're just starting to crack. So that's where we're at. I think this market just needs a little nudge right now. If we could just push it and get drop another 1% or so from where we're at right now, that especially close down at or below that level, that should do the trick. That should sharply increase the odds that these swing trades this time around will pan out. Otherwise, it may end up being more of the same. And if it is, not the end of the world. The stops on all these trades are relatively tight. They're relatively small in percentage terms. It would suck to have another round of QQQ and SOX trades stopped out. But as long as you keep the stops relatively small, I'm just drawing lines here. It's not where that stop is. Then we'll finally catch one of the runner trades. But I think there's a lot of hot air in these stocks, and we could see a very sharp drop if we can just again get over that hump there, get well below these trend lines. Because right now we've already seen tech break, and we've seen QQQ break, and we've seen SPY break, and that's about it. So. We just need to see the semis follow suit. There's XLK. Again, this just reinforces my desire to be short right now. I would rather take a solid sell signal like this and be stopped out than to pass up on it and to miss out on a nice trading op. Like I said, sooner or later these charts are going to play out for the correction that's being priced in, and hopefully it's this time around. If not, we'll just get the next one. And that's it. We're going to wrap it up here. This has been Randy Finney with the right side of the chart. I hope you enjoyed it.